Hey guys, welcome back to the Capital Mindset Show. We are your hosts with the most, Austin and Fabio. And today we're going to be talking about Bristol Myers Squibb, ticker symbol BMY. This is going to be kind of a preliminary analysis. We're just going to kind of be offering our thoughts regarding this stock a little bit. I'm going to be asking Fabio the questions. As always, Fabio is going to have all the wonderful answers. So without further ado, what are we looking at here today? Oh, we did make a initial preliminary analysis video about Bristol Myers Squibb, but we are now kind of, it's like a follow-up of our initial preliminary analysis. So without further ado, what are we looking at here today? And I guess we're starting with the price action. Wonderful.
Yep. So you can kind of see that I think I'm already out of this position, but for different reasons. But Austin still holds the position and you are up on the position now. So a lot of the reasons for us adding it was the valuation, right? Simply put, the valuation was pretty nice. And then we saw some write down right here, and then we added some more, and then we wrote it all the way back up. I sold at around, I sold yesterday. So it was like 59 something. And I'll explain kind of why I sold out. But real quick, let's actually take a look at the model and see what we were actually like taking a look at. And so I think we can discount. Let's start at 10%, and then we can maybe put our ranges of like, let's say 15%. Yeah, you see with 15%, that's definitely, I don't think that's worth how they're going to grow going forward, because I forgot to mention that was the acquisition. So I'd actually expect lower growth rates is fine. And let's actually make the 5% the middle ground, and you'll see why. And then I'll say 8% is the high ground, 7% is that, and then I'll do 1% for the lowest, and 3%. So actually, you know what? Fair enough.
My question here before you move any further, I was going to ask if those growth rates were kind of, I mean, I know that it varies company by company, so you can't paint the brush across all, but if like typically in the pharma industry, if we see growth rates like that, or if growth is kind of slowed in the industry that it's in. I mean, obviously it's different. There's a company by company basis, but just sort of the broad macro.
And yeah, you see, like I just use this tool down here, and I asked the model, hey, can you return to me what they grew in the average 2 years of the first 2 years going back 5 years? And it was 7.7. So I'm comfortable with a normal of 5. So it just depends on their pipeline. We know that Bristol Myers Squibb has a good pipeline in oncology. We talked about that in our original video. So all that is still very true. Analysts have a buy rating, 18.9% upside is according to their projections. Now the model is telling us this. However, we're only discounting it at 10% market average return, which we still will do the video one day soon about why I have a problem with that. But that is technically the mantra of the financial industry. And let's see if 12%, we can see at 12%, slightly market beating returns, or you can think of it as a little bit of a margin of safety. You can still see that based on the middle estimations, we're still good to go. The model doesn't actually think that there's much risk to this investment. So it's actually highlighting at the current required rate of return that remember, it doesn't literally mean to allocate 114% of your portfolio to this company. It's kind of like a flagpole of measure of risk. Okay. And then so let's actually discount it at 15%. All right. So you see at 15%, now the requirements start to get a little heavier for the business. I remember when we were adding to this position, we could have assumed a less than 5% growth rate, and we were golden basically.
I think we were assuming like a 3%. Actually, yeah, it's even reflected there when we were adding into this.
And then when we were looking at it for 20%, so 20% is asking a little bit too much for this. We'd have to see the price come down a little bit. So it would never have been a very large portion of my portfolio, but it was at a decent amount. I think I had around 800 shares, and I took it for a quick profit. And a lot of the reasons mostly stems from I wanted cash for other opportunities, and it didn't necessarily meet entirely my criteria for what I wanted in a business. But that doesn't mean it's a bad business. It's just that I had other things I wanted to focus on rather than this business. So going forward, if it continues to rise, good for everyone who's involved. Austin's involved. Austin's invested. He's going to remain invested. I'm not going to be invested. So I'm going to miss out on whatever profits occur. I actually think it will be a good investment going forward.
Which actually, speaking
Yeah.
of now, what were some of the reasons you decided to sell? Because I don't plan on selling anytime soon. I think this is a good business. I bought in at a very favorable price for myself. Satisfies, I say this all the time, satisfies my own assumptions. I was able to
Yeah.
apply a pretty significant margin of safety. And then I still believe that because this is such a solid business, there's room for my investment to prove pretty fruitful with this. So I kind of want to hear your reasons for why you decided to sell out of this position.
Well, it wasn't because it's a bad business. The numbers are fine. Everything's fine like that. I won't get into too much detail as to why on the show here, but it stems from I wanted the cash to be deployed in other opportunities, and some little nitty gritty details were not to my liking, to say the least. But I'm being gritty, nitty gritty. So you could say at the very least that I'm picky, and they're not. And I'll be the first to admit they're not, deal breaking, right? For a lot of people, for the grand majority of people, they're not deal breaking. It's just for me personally.
It's just like a preference you kind of have.
Yeah,
which
and
is,
it's more of a
which is fine.
personal.
Yeah.
It's more of a personal thing. So
Yeah, and that sort of emphasizes the importance too of just standing on your own 2 feet regarding these sorts of things. If there's something about the company that you did not personally like, then don't remain invested in the company.
But
it's as easy as that.
Remaining objective, I think it's a good investment. Remaining objective, I think based on the numbers, based on the risk profile, it's a good investment. You could do a lot worse than this company. On that being said, do you have any closing thoughts?
I do not have any closing thoughts, just that I don't plan on selling anytime soon. I am long Bristol Myers Squibb, and if the price comes back down, I will add on to this position. So with that being said, we are your hosts, Austin and Fabio. If you've liked what you've seen here today, please be sure to share the video. Really, really helps out the channel. Please be sure to visit our website at capitalmindset.org. Like, comment, and subscribe, and we'll see you guys later. Take care.